I want to stick with the banks for a moment. We haven't talked a lot about them recently as a sector. The Fed this week coming out and saying it expects to keep rates near zero for the foreseeable future, probably through 2023. Are banks a good bet right now in that environment?
Hey guys, good morning and happy Friday. There's a lot of value in banks. That's essentially what's most attractive to them. But the problem is value doesn't always equal opportunity. We need to see a catalyst where there can get some acceleration in the earnings growth of the banks. And that's either that we start to see the yield curve steepen, which if that's going to happen, we need to see an uptick in inflation or growth first, or we have to see people borrowing more money, which you'd think we'd have to be a little bit further along in the economic recovery. So there is value in banks, and I think you can buy them over the longer term. Is this probably a good place to add some bank exposure because of that value? Yes, but in the near term, we need a catalyst, and we don't have one.
Tom, I'm sure you were following closely the Snowflake IPO this week. We have CEO Frank Slootman on with us shortly. What would you want to hear from him with regards to the company's outlook over the next 12 to 18 months, if you do have any interest in getting in the stock?
Yeah, to me, I would really love to hear how they plan to make money, right? I know they have revenues, but how is he going to take those revenues and get to profitability? That obviously was a fantastic IPO. That's great for everybody that had it, great for the people at Snowflake. But at this point now, we need to see that turn into a viable and profitable company. And that's really what I'd like to hear from him.
What about broader tech and those big FANG names that we were talking about a short time ago with Jared? They're on the upswing here this morning, but have you changed your allocation in these stocks recently?
No, I still think that while they're going through a period of digestion, which is to be expected, right? We all know the July, August rally, that vertical rally was never going to be sustainable over the long term. But if you look out and you say, gee, where can I put capital where I know there's going to be growth, I know there's going to be a solid balance sheet, and the trends that have been born out of the coronavirus of working from home, working remotely, working from anywhere, online shopping, it's still these major tech names. So are they expensive? Yes, they are, historically speaking, but they also have tailwinds, the likes of which we haven't seen before. So as I look around the market, I think that, again, beyond the next couple of weeks or month or two, that's still one of the best places to allocate capital for the longer term.
Tom, let me veer a little into a different direction here. So much focus right now on this new millionaires tax from Governor Murphy in New Jersey. Now, this doesn't apply to you. You're down in Florida. But are you concerned from a person that manages money that's involved with the market? If we see more plans like this to meet budget deficits, if we see more plans like this next year, what type of risk does that bring to the markets?
Well, it's funny. I was asked this very similar question last night at dinner. I think that from a market standpoint, anytime that the government is taking more capital to a point out of the economy and out of people's pockets, that's obviously a negative. Now, with regards to the millionaires tax in New Jersey, and we're seeing this in other places, right? We're seeing it potentially in California, potentially where they're talking about a wealth tax. New York, now there's pressure on them to do this as well. But I think to a point we're just sort of moving the chips around the board, because this is probably positive for us here in Florida. We're getting, obviously, lots of millionaires are moving here, which is great for this state, but then also Texas and Tennessee. So I think that if this becomes sort of a larger, hey, let's increase taxes to cover these budget holes, then that does pose an economic risk in 2021 and beyond. But for the near term, it's sort of what's bad for New Jersey potentially is good for Florida and Tennessee and Texas. So I think in the near term, there's not really so much of an economic hit. Longer term, it's something to watch.
For sure, something to watch, see if those millionaires continue their exodus out of high tax states like New York and New Jersey, California as well. What about other opportunities right now in this market in terms of housing? Because we got those housing starts numbers yesterday. They were kind of disappointing, down 5.1%. They came off of a really good month. But do you think maybe housing and housing stocks have gotten ahead of themselves a little bit in this environment?
Yeah, in the very short term, sure. I mean, we saw sort of a similar, almost vertical rise, right, in the housing names following the August data, which was or the July data, which was very strong. But the fundamentals of housing remain fantastic, right? I mean, there's historically low mortgage rates, generally speaking, especially in the higher end of the market. There's good capital behind it. There are strong personal balance sheets still. And this is a lot different. I'm seeing some comparisons to, 05, 06, 07, and now with the home price appreciation. This is a very different time. We're seeing this very specifically here in Florida. Home prices are going up very quickly. There is no supply, but the people who are buying these homes can afford them. And that's the difference between now and 05, 06, 07. These are not being bought, with nothing down, what we call ninja loans, no income, no jobs or assets. These are real people who can afford these homes, and they're relocating. So a little bit stretched in some of the home builders and the housing names, the XLRE, but this is a trend that has legs.